Hello everyone, hope you're all doing good and welcome back to my YouTube channel. After the video of roadblock, a lot of you DM'd me on my Instagram asking how do we take an entry from higher time frame point of interest by using current market price, and how do we follow SOP. If you don't know what is SOP means, SOP stands for standard operational procedure. This is what we use in order to take an entry, right? Now let's dive into that and let's actually have a look the scenarios. How do we actually use current market price by using higher time frame? All right. Quick disclaimer that this video is only for informational purposes and it doesn't constitute any financial advice. Please consult professional advisor before making any financial decision. Remember, trading involves significant risks. All right. Now, as we can see, before I start the analysis, I always check from H1, H4 and daily time frame. Why is that? Simply because in CMP we got specific time frames for specific reasons. For example, M1, M5 and M15 stands for CMP, which is current market price. H1 and H4 we use only for direction, correct? Daily, weekly, monthly we use only for storyline. This is what I personally use. Right now, if you have a look H1 time frame, this is one of the best example where I can actually explain the entry model. If you have a look H1 time frame, first of all, we can clearly see we've got break of this significant high where price creates another higher high, correct? So the only low which actually caused that breakout is this low right here, which is our external low, correct? And price pulled back to this external low. Now, I know you might be asking where is reaction itself coming from. This reaction alone coming from higher time frame. So we're not going to go all the way to the story of the whole storyline, etc. Simply because that's going to take over, I don't know, 10 hours video maybe. Now, as we can see, price literally pulled back to the external low, correct? Now, once price was in external low, the only things I'm going to have to do is to check lower time frame. And what's the lowest time frame I can have a look? Well, logically speaking, this is M1, correct? I'm not sure if you guys using a second time frame. Some of you, I know you're using 5 seconds, 10 seconds, which it doesn't make sense for me. I'll be honest with you. I know I've been also tried to using that seconds time frame, but come on, bro, it doesn't make sense personally to me, right? Now, if I have a look M1 time frame, what we see. Now, your first task is to quickly identify where is your last external structure, all right? Because if you have a look, M1, a lot of you would mark this one as a breakout, correct? And a lot of you might think this one is your external high, correct? Which is absolutely wrong. Let me prove to you. As we can see, before we mark external structure, you need to understand what's the definition of external structure, all right? Now, what we're looking for external high. And what's the definition of external high? External high is the high which breaks significant low or the lowest low or the external low and creates lower low, right? You need to always ask yourself before you mark any type of external or internal structure, all right? Now, as we can see, external high is the high which breaks significant low. Significant means the lowest point, correct? As we can see, this one is the lowest point and creates lower low, right? Now, I clearly see my external high right here. Now, what about this breakout? Well, this breakout is absolutely internal breakout. Why is that internal breakout? Simply because, pay attention, when price created this low right here, correct? Or this breakout right here, first of all, price couldn't create lower low by breaking this significant low over here, correct? I know a lot of you also marking breakout based on the body closure of the candle, correct? Because if you're gonna mark based on the closure of the candle, what happens? You just think this one is your breakout and you mark this one as an external high, and the moment you take a sell, you're just gonna get stopped out immediately, correct? So there's no point for me to mark the breakout based on the body of the candle where the closure itself is whole OHLC type story. If you don't know what is OHLC, please go ahead and watch my, I think, first or second video where I explained about OHLC, how do we use OHLC, how do we mark OHLC, what's the task of the OHLC, and etc. Correct? Now look at that. The way how I mark the breakout must be based on the low of the bullish candle. Right, I've got low right here. Let me actually zoom in for you to see. As we can see, I've got low right here, which is OHLC type support, correct, which is bullish candle. By the way, support must be marked based on the strictly bullish candle, correct? So we've got bullish low right here. As we can see, price couldn't create another breakout. Instead, created what? Another OHLC type support. So this one is what we call extension. And the last extension is eventually bigger than the previous one. So my low will be based on here, correct? Now, if I want to see the breakout, I will make sure that price must close below this new low. I don't care about this low anymore. All I care is this OHLC type support, which is my fresh point of interest, correct? Now, we're looking for buy. Why is that? The answer is we was in this H1 external low, correct? There's no point for me to look for the sell and get stopped out and start over trading, losing my mind, and etc. All right, so you need to be really disciplined in terms of the quality of your setups. If you want to take quality setups, high quality, high probability setups, you must be really disciplined, right? Now, before I take a buy, what I do, I marked my external high, and I'm gonna have to wait until price breaks OHLC type resistance right here. Why is that? Because the breakout must be marked based on the high of the bearish candle. Starting from open and high of the bearish candle, this is what we mark OHLC type resistance, correct? And this is what we mark combination of OHLC with what? Bearish engulfing, correct? So as we can see, price literally created bearish engulfing. Now, I want to see the break of this external high before I take a buy position. Simple as that, correct? I'm not interested about this breakout. Why? The answer is this high is internal, and taking a trade from internal structure is really high risk. There is a ways how do we take an entry from internal structure. It's more advanced entries where we discuss with community, where I personally teach my students how do we take an entry based on the internal structure. Even so, your direction is bearish and we take a trade based on the expectation. So this is what we call anticipation trade, where you're taking a trade and you expect price to break certain levels, and price usually follows that if you do correct analysis, right? Now, all I care is, like I said, this one is internal. Let me actually change the color for you. So this one is internal, which I don't care. And all I care is this break of external high right here, correct? Now we've got beautiful break of external high. Now, what does it mean? That means, my friend, your direction now has shifted from bearish back to bullish, right? Now, after that, never ever jump into the trade before price pulls back to your point of interest. Because what I've realized, a lot of you guys taking a direct trade after the break of external high, which is one of the biggest mistakes. This is why some of you blowing the account straight away and thinking, oh, CMP never works. CMP works. It's just you not being accountable for your own trades. It's just you. You are a loser. It's not just CMP. It's not the strategy. It's you. You are a loser because you couldn't control your own emotions and you jumped straight into the trade without waiting for the confirmation. Correct? Now, your direction is bullish. After the break, now pay attention, after the break of this external high, all I care is higher time frame. Why is that? Because look at that. After the break of this external high, if I have a look higher time frame, price created what? Fresh bullish engulfing. Now, what's the task of the engulfing? The task of the engulfing is to test external points. Now, the question is, where is the external high based on this whole, messy price action, which is whole internal structure? Let me prove to you why am I calling this one as an internal. Check this out. We've got OHLC type support, correct? Price created. Do you remember what I said about extension? Extension, correct, which I care about this support until price created another extension right here. Until price created what? This extension right here. So my breakout must be based off this low. Once price breaks this low and close with body, then I'm going to mark this one maybe as an external high. Now, do I see any breakout? No, I don't. So where is my external high? Based on the current market price, my last external high will be right here. That's it. This is that whole price action right here is just a pure internal price action. So I don't care about that part. Okay. Now check this out. Once price created fresh bullish engulfing, all I care is just to pull back to that bullish engulfing. Now, this is another mistake where a lot of traders get trapped. When the price creates, let's say, a bullish engulfing, you take a trade based on this bullish engulfing somewhere around here. Let's say you want to take a buy around here, setting stop loss right below this low. And let's say you're targeting M5 external high somewhere around here, correct? Now what happens? Or let's say you're targeting above this external high, taking anticipation trade, right? Now what happens? Price gives you a little bit profit, obviously comes down, stops you out, and still goes all the way up and hit that take profit, correct? Now look at that. It actually went all the way up and hit that take profit, correct? Now what's the answer? The answer is, guys, you're still confusing yourself with operation of time frames. And it comes with experience. I'm going to be honest with you. I'm not saying that price will always pull back to a higher time frame point of interest. But based on my own experience, all I just want to say is, sometimes you need to be you need to be a little bit experienced in order to identify which one is right point of interest and which one is, high risk for you to say, okay, so you know what? Maybe this one is slightly high risk for me and I'm not going to take it, correct? Well, in fact, that could be one of the best trades as well. I'm going to be honest with you, because price could went all the way up without even pulling back to the M5, correct? So those who take a risk right here and they just got stopped out. But what I personally realized, I would say 8 out of 10, correct? Price always pulls back to the higher time frame point of interest in order to mitigate fresh support. So what I mean by that, the only reason why price went all the way down here and went up, in fact, you've got this one as a roadblock as well. Price never pulled back to your roadblock. Now, the question that that comes up to your mind, saying, where the hell this pullback came from, and why the hell price just reacted literally from nowhere, correct? Most of you would mark this one as a God knows some type of SBR, RBS. This is what some traders trade as well. SBR means support become resistance. RBS means resistance become support, correct? So you mark this one blaming, okay, so we've got RBS and I'm going to trade RBS. And the next time you mark RBS, you just get stopped out 100%. This is what I know for sure. Now, the only reason why price didn't pull back to your point of interest right here, check this out, is because of the higher time frame. This is what I said. After the break of your point of interest on M1, you need to always check higher time frame for creation of bullish engulfing. Now, guess what? If you have a look higher time frame, correct? As we can see, price also gave us this internal high breakout plus external high breakout right here, correct? Now, look at that. After the break of your internal structure, correct? If you have a look, higher time frame, price also created bullish engulfing, correct? In fact, look at that. Look into the M15. This one is external structure, correct? Based on the M5, this one is internal structure. Now, this is where a lot of confusion comes up. What to do when you got lower time frame as an internal structure and higher time frame as an external structure? There is another way. How do we, filter out, let's say, internal structure, and how do we take a particular trade from internal structure with expectations that higher time frame will follow up all the way to the, let's say, to the opposite roadblock, which means all the way to this roadblock right here, correct? Now, we're not going to talk about this one, how to filter out the internal structures with external structures, whereas your higher time frame is bullish and your lower time frame is bearish. But all I just want to say is follow higher time frame, correct? Let's say if your lower time frame direction right now showing you internal structure and higher time frame already showing you what? External structure. Guess what, my friend? You need to follow that higher time frame. Why is that? I'm going to tell you, because if you after the break of this external high on M15, if you have a look H1, what do you see? Price created whole bullish engulfing on H1, correct? Where you must be really careful from this point of interest. Why? Because price will pull back to that bullish engulfing as well. And this bullish engulfing is very strong. Why? Because this is single candle bullish engulfing. This one is two candle bullish engulfing. There is specific type of the engulfings as well, where price reacts, let's say impulsively, where price reacts with internal structures and etc. There are ways how do we actually identify internal and external structures with the different type of bullish engulfings as well. If you want to know how to properly identify those kind of topics, if you want to learn how to properly identify the bullish engulfings and external with internal structures, check out the link for the private community where you will be joined to the Discord community where we do Zoom sessions from Monday till Friday. I will see you there. All right, now let's come back to the topic. Now we've got bullish engulfing right here. Check this out. Where this bullish engulfing came from? Because of the break of external high on M15. Correct? That makes sense. And why this high is external? The answer is, if you have a look, your direction based on the M15, it was bearish. Where the direction shifted bearish? Right here, my friend. Right here, your direction was already bearish until price shifted direction back to bullish. Makes sense, correct? Now, the question is, where this bullish engulfing came from? Well, that bullish engulfing came from because of the break of internal high. That makes sense, correct? Where this bullish engulfing came from? This bullish engulfing came from because of the break of external high on M1, correct? Which was this one. Let me actually mark this external high in red color. And we go straight to the M5, correct? And we can clearly see price created bullish engulfing, correct? After the break of M1. And price literally pulled back to the M5, right? Now, look at that. Let's say you missed that entry. You just missed that entry and you don't know what to do. So now you're going to have to wait until price actually pulls back, correct? Now, where is the area where most probably price can pull back? A lot of you would say it's this bullish engulfing. Correct, absolutely correct. That makes sense. That's the common sense where price most probably can pull back to that external low. However, guess what? We have 3 time frames breakout starting from M1, starting from M5, starting from M1, M5, ending with M15. Those are CMP time frames, correct? And directional time frame, which is H1, already created what? Bullish engulfing. So now guess what? Price pulled back to that bullish engulfing, my friend. Price literally pulled back to that bullish engulfing, correct? Now, when price pulled back to that bullish engulfing, all we have to do before we take an entry, correct? Before we take an entry, we have to wait until price breaks external high of M1, correct? Which is this one, right? Create another bullish engulfing. For now, there is no bullish engulfing, so I'm not taking an entry unless I see clear bullish engulfing. Okay, now I'm kind of interested for this bullish engulfing, correct? Why is that? The answer is this bullish engulfing should create M1 bullish direction. And if I have a look, M1, I've already got this bullish direction, correct? Now, let's say you want to take an entry from this external low. Can I take an entry based on this external low? Absolutely, I can. However, where is my stop loss? My stop loss will be based on the significant low of the M5 time frame, below this low, somewhere around here, correct? Somewhere around here. Why is that? Because look at that. Whenever you see this type of bullish engulfing, where price creates engulfing inside the previous bearish candle, those ones are usually trap. Why is that? Because what happens usually, price goes all the way down, breaks this internal low and still goes all the way up, correct? And once price breaks this internal low, price creates bearish engulfing. And that bearish engulfing is also manipulation for sellers as well. So price manipulates buyers and price manipulates seller at the same time, correct? Now, all I want to do, if I took an entry based on this external low, correct, based on the M1, because price created external low right here, which is this beautiful bullish engulfing, correct, after the break of this external high, price created a bullish engulfing on M5, correct? So I took an entry, stop loss below this significant low, which is OHLC type support, correct? And what is the target? Well, the target will be based on the higher time frame, correct? Now, I'm going to have to find where is my potential roadblock. Based on the M15, there is no roadblock. Based on the H1, this one is my external high, correct? However, before I move to the external high, I'm going to have to check H4. Why is that? Because if you have a look H4 created this one as a bearish engulfing, which means price might not pull back all the way to this external high of the H1 because we already got bearish engulfing on H4. So we prioritize higher time frame. Correct. So my target will be where? My target will be obviously on H4. Correct. So this is why I took an entry, let's say. Correct. So with stop loss below the M5, targeting H4, literally bearish engulfing somewhere around here, plus minus, right? And as you can see, price pulling back to this bullish engulfing again. Look, to this bullish engulfing. Like I said, stop loss below this significant low. I'm not setting my stop loss below this internal structure. For now, this one is internal because price never created another higher high by breaking this significant high right here, correct? And as you can see, price going all the way still up and hitting that stop and hitting that take profit, correct? Obviously, this consolidation was just the internal structure. This is what we call accumulation, correct? Price accumulates before it distributes, right? Now, you might be wondering why price didn't pull back to this external low. Like I said, the answer is H1, correct? Because price pulled back to the H1 bullish engulfing, and the task of the engulfing is to test external points, which is this bullish engulfing. Bearish engulfing, correct? From bullish back to bearish engulfing, from bearish back to bullish engulfing. This is how we use operation of time frames by checking higher time frames as well, correct? Now, this is how we personally take an entry. And as you can see, price literally went all the way up to this bearish engulfing, which is right here, correct? Now, from here, eventually, we've got what? We've got the reaction. So that's why, if you have a look, H1, price couldn't pull back. But could we identify this reaction before price even dropped? Of course we could. You could literally find that from M15 based on this internal high, correct? Which actually created this bearish engulfing. Price, look at that. Price, if I have a look, this one right here, we've got OHLC type support, correct? Where price couldn't break it, right? And we've got what? This one as an external high, correct? After the breakout. Now, all I'm interested is where this bearish engulfing came from. In order to find the answer, I'm going to have to check lower time frame, right? Because if I have a look lower time frame, okay, now we got something interesting. We've got this one as an external low breakout, correct? Why? Simply because if you have a look right here, we've got break, we've got OHLC type resistance, correct? And we've got this one as an extension. So there is no external low right here. Obviously, price created internal breakout where we could potentially take some trades based on the internal structure, correct? Because this one is our original external high, because this one is actually the one who broke this, which broke this external low, correct? We've got this one as a external high, and we've got, yes, this one as a roadblock. I already made a video about roadblock. If you guys haven't watched that video before, please go ahead and watch that roadblocks. Now, when price pulled back to the roadblock, all I have to do is just wait for the confirmation, which means I'm going to have to wait until price gives me another fresh external low breakout right here, correct? Creation of fresh external high. Now, if you're setting your sell limit right here and you're wondering, yeah, why price didn't pull back? Price didn't pull back to my bearish engulfing, so I took a sell. I lost all my money. CMP doesn't work. If you're wondering why price never ever reaches your point of interest, is because you actually don't know how to use operation of time frames, my friend. This is what I'm keep repeating to everyone on my Instagram, on my all social media platforms. This is what I'm keep repeating, saying, guys, if you set a limit and price never reaches your limit orders, the answer is you've already got higher time frame point of interest, correct? In this case, if you have a look M5, we've got this bearish engulfing. Look at that. We've got this bearish engulfing where price actually reacted, correct? Went all the way down. Now, where would be the target? Well, if you do understand the target, you could literally, I'm telling you, you could literally target roadblock of the M15. Correct? Why? Because we are coming from bearish engulfing of H4, my friend. Correct? And we're at least targeting M15 roadblock. Right? Because we know that higher time frame has an ability to break lower time frame support, lower time frame external structures. And this is what happens. This is where price literally breaks. And if you could target all the way down here, that would be another beautiful take profit as well. Correct? And it's so on. So price goes all the way down here to the bullish engulfing. From this bullish engulfing, you've got another pullback to this external high. Why is that? The answer is when price created this bearish engulfing, price also created, guess what? This one is a bullish engulfing, correct? This one is a bullish engulfing right here. In fact, we've got a break of this bullish engulfing. Now, that break must be confirmed with daily time frame. Now, if you have a look daily time frame, there is no bearish engulfing for us to say, okay, now we're not taking this one, let's say, as a point of interest, correct? Because you can't sell from this bearish engulfing. That bearish engulfing must be also confirmed with H1 significant low breakout, correct? Now, as we can see, there is no breakout and H1 direction was already bullish. So if your direction on lower time frame is bullish, higher time frame bearish engulfing is not confirmed. This is not verified bearish engulfing, and so on. Yeah. Hope that video is clear, guys. I'll see you next time. Peace.